86% of businesses are overpaying on their tax. The tax code has so many opportunities in it for entrepreneurs. Nobody tells us, nobody brings it to our attention.
They're like, oh yeah, Trump's not paying taxes. Son of a... No, Trump is leveraging the loopholes.
Yep. We have clients that we eliminate their tax bill for them.
What do most accountants not want their clients to figure out?
The number one reason that the IRS disallows those deductions when they audit you is...
What do you think the most overlooked deduction is that businesses miss?
Ooh, that's a good question.
What it is, Brad Lee back again with another episode of Dropping Bombs today in the studio, folks. I got a real treat for you, especially if you like saving money. Adam and Jackie Williams in the house. These guys have penny-wise tax strategies. I don't know how many entrepreneurs do you know that celebrate a six-figure tax bill. Most of them don't, but their CPAs do. Today, these two are tired of watching high-performing business owners get wrecked every year by surprise tax liabilities, told to congratulations their way through it by people who should have known better. After building a company that landed them on the Inc. 5000, Adam, who's an attorney, and Jackie, who's a CPA, did what most don't. They stopped playing defense with the IRS and started playing offense, and now they use their own businesses as a case study and saved over $250,000 in taxes in 1 year. Now they built a movement for entrepreneurs called Pennywise Tax Strategies, designed to help you keep your damn money. Your mission, folks, is to empower small business owners to stop making involuntary charitable donations to the IRS and start building real wealth. Why? Legally, by the way, strategically and proactively. Yes. And what a killer pair, a CPA and the attorney. Usually you got a CPA, they tell you to go find an attorney. You got an attorney, they tell you to find a good CPA. They get both right here.
Why we try and do it? Yeah.
Now, did you guys do that strategically or did it just so happens?
Well, wait, you tell the story.
You are married, aren't you?
Somewhat strategic,
oh, yeah.
yes.
We renewed our vows in front of Elvis on Sunday.
Yes,
it was
did.
Awesome.
It was beautiful.
Yeah, but I mean, I just assumed. I didn't even ask.
Yeah.
You know, if you guys would have freaked me out if you said, no, we're brother and sister. But so you guys didn't strategically say, hey, it just happened that way. Was she a CPA when you found her?
No, we started dating in high school.
Oh, shit.
Beginning of college, I guess. Yeah. First year of college.
Oh, damn. This is a true love story too.
It is. Yeah. See, real relationships.
Yeah.
Well, it just turns out though, it's just a perfect duo for anybody that really wants to structure and save on taxes legally and strategically. It's usually rare that you get both in one pair.
A pretty good combo. Yeah.
Yeah.
And I think that's part of where the business came from is Jackie worked in big corporate jobs and big accounting firms. I worked at a big four accounting firm too, but she, over the last 6 years now, has really seen the light of entrepreneurship and like what that can mean for income and legacy and freedom and all those other reasons that we start businesses. And that's also why we have this business is we want to empower entrepreneurs. That's how they achieve freedom. It's how they achieve success. It's how they create jobs and do all the cool things that happen in this country. So.
Yeah. And why give it to the IRS if you don't have to?
Right.
Again, I'm not saying don't pay taxes. My stance on that is you better pay taxes and you better pay them on time. Mm-hmm. You can get in some serious shit if you don't pay the IRS.
Yeah.
Yeah.
So absolutely. I highly recommend anyone that ever asks me, dude, get yourself a good CPA and a good attorney and pay your fair share. But again, you're a fool if you don't understand the rules. And that's why you guys are so popular. And that's why I'm glad you guys are here because I got a lot of entrepreneurs listening to the show.
Yes. Yep.
And I don't think they realize that, you don't pay a good, I'm going to call you guys pair from now on.
Okay.
Because you need both and you just happen to be both. But you don't pay you guys. You guys pay for yourselves.
Yeah.
And that's what people don't get. Like, well, I'm not, I can't afford them. You can't afford not to have them.
Yep.
If you're thinking about it correctly, if you're making money, let's just say, you're not making any money, you're losing it all. They don't necessarily need a good tax strategist.
And we guarantee that in our business. We guarantee you're going to get a return on what you pay us, or we're going to help keep you out of jail.
Yeah.
Which too many of our clients come to us with those problems too. But yeah, I mean, that's
how do you help them keep them out of jail?
Well, we uncover a lot of problems because
they would have went to jail if you didn't discover
they would have had a bad time.
Yeah.
Penalties, interest.
We help them understand where they're missing things or, where they need to capture things or should be doing things differently.
And get them straightened out.
Yeah.
So folks, if you're paying attention, I'd pull the truck over, maybe even, slow the treadmill down and pay attention. Because there's a lot of entrepreneurs that miss a lot of money and then they wonder why they go out of business 5 years later, let alone getting tax issues. Because a lot of people, dude, they think, like, for example, when you withhold wages and then you don't give those to the IRS. Oof. I've talked to people that they're using that money thinking, oh, at the end of the year, I'll have all this other money and I'll pay it then. Oh. And so they're using withholdings. How much trouble can someone get in doing that?
Yeah, you shouldn't do that. Yeah. I mean, that's actually one where the IRS can come after you. And not only do you have to pay the withholdings, but they can make you pay penalties in the amount of the withholdings. So if you kept $100,000 that you didn't pay for payroll tax, you might have to pay them $200. So yeah, penalties are pretty steep for that one.
But what if I'm an entrepreneur, man, and I need my cash flow?
Yeah, then you need to get a trusted advisor on your side that can tell you some ways to free up some cash flow or get a banking relationship or some investors or spend your money in a better way so that you got that cash flow. I mean, we were talking about that before the show, Brad. Most entrepreneurs, we just got into our business because we thought it would be cool. We didn't understand how all of this stuff worked. We didn't understand cash flow and the relationship to the balance sheet and the profit and loss. What we understand as entrepreneurs is how do I bring in more revenue? Yeah. Because that can solve an awful lot of problems. But you reach another level where you mature a little bit and you start to understand business a little bit better, and you get these advisors on your side that can say, hey, we've been there, because we have been there in the business, and we have other clients who've been there, and we know how to get through this and still allow you to sleep at night.
Yeah.
So how did the story happen? You guys made an exit or something, or what happened?
So I had a law firm. We were on the Inc. 5000 list. We did really well with the employee retention credit, and we were helping with PPP loans and EIDL loans and all the pandemic stuff. And the business was really taking off. And we realized that a lot of our clients were having the same problem that we had, where their accountant would say, well, what's next year look like? Oh, you're going to make that much? Here's how much you're going to pay in estimates. And we started talking about real money, 7-figure checks to the IRS, just hoping that covers it for the year. And we started looking into more proactive strategies, and we realized that there's so many business owners out there that they meet with their accountant in the first quarter of the year, and their accountant hits that April 15th deadline or maybe files an extension, not realizing there's so much stuff that they could have done throughout the year. The tax code has so many opportunities in it for entrepreneurs that, again, nobody tells us, nobody brings it to our attention until Adam and Jackie are sitting on your podcast or your stage telling you there's opportunities out there. So it really came out of this realization, like true entrepreneurs, there has to be a better way. And it turns out there is. If you can be proactive and forward looking and do planning around your taxes, you can very effectively lower that tax bill, have more cash in your business, and do cool stuff that Uncle Sam helps pay for.
What kind of amounts, throw out some numbers, like the average business could save what? $300,000 a year?
I read a statistic that 86% of businesses are overpaying on their taxes. And we can get really crazy with some of the amounts. Do we have clients that we've saved millions of dollars? Yes. Yeah. But where that gets nuts is if I help you save you $1 million this year, right? We're talking real income if your tax bill's up there, but I'm gonna help you save $1 million on your taxes. What are you gonna do with that $1 million? You're gonna invest it in something, right? Back in your business, buy another business, give it to your financial advisor. So it multiplies over time too, that those savings, if done properly.
Yes. And some of the strategies, like you find it in 1 year, but then it provides that savings year after year after year. So that might be just 1 year of savings, but then, you're now set up to save it for years.
How do you guys keep up with the tax laws?
A lot of
caffeine.
Yeah.
Do you guys use AI now to read through it and spit out what's factual?
A little bit. You gotta be careful. AI still isn't where it's going to be in a very short period of time. But yeah, we definitely use it for a lot of stuff in our business. And I think there's a point actually where tax preparers are going to be in trouble because people can just give their documents to AI and it'll prepare their taxes for them. But the advice and the implementation side of things that that we focus on. People are still going to need help with that.
Yeah.
So what kind of strategies, if people are listening, that you would just give them off the cuff, like things that most people wouldn't know?
Oh, we got a lot of time. So,
well, I think the first thing that I would have people look at is their entity structure. I think so many people set up an entity and they just set it and forget it. So I think that's the first thing is like really look at what your entity structure is and talk to an advisor about whether it still makes sense.
Or C corporation.
So a normal business doing, let's say, $5 million a year or less.
Yep.
Should they be LLC filing as an S corp? Should they be a S corp? Should they be a C corp?
So that's where having a trusted advisor is important because it all depends on what your plans are. So are you planning on exiting it? What is your industry?
Does it matter?
How do you take it? Does because, for example, if you're leaving a lot of the cash in the business, an S corp might not make sense because then you're, especially at that size, if you're netting an amount where you're paying the highest tax, marginal tax rate on a portion of that, it might make sense to instead have the corporation be paying a lower corporate tax rate.
Yeah. So when we first set up Lightspeed as an example, we were a C corp for years and years and years and years and years. And we weren't making any money for years and years and years and years and years. And then we started making money and someone said, you should switch to an S corp. You'll save on taxes. So we filed whatever we needed to file and we switched to an S corp. And now people like you guys are saying, no, you should be a C corp. It's like, how in the hell do you know? So there's business owners are in business usually to make money.
Yeah.
So I just want to make money. There's no strategy or plan. I run a landscaping company. We're doing a couple $1 million a year. Should I be an LLC? Should I be a C corp? Should I be an S corp? Or should I be an LLC filing as an S? Because that's what I was told is the best. And that's what the Bradley Inc. is.
That's probably the most common structure for.
Right.
Is it a good one though?
Yeah, I think so.
Yeah, especially if, depending on how much you're netting, right?
And so that's going to be the most common entity structure for small businesses that actually put some thought into it, right? The cool thing about that S corp though, is it opens up the playbook on a ton of other strategies, like putting your kids on payroll and writing off more business travel and setting up the retirement accounts. And there's so many other things that you can do now because you have that entity structure in place.
A C corp, you couldn't do it?
In a C corp, you can still take advantage of a lot of those things.
Well, the reason they told me to switch is because ultimately I was paying taxes as a corporation. And then as soon as I took my money, I was paying taxes as an individual.
Yep.
Mm-hmm.
They said, if you switch to an S corp, the company doesn't pay taxes. You pay them all.
Yep.
And you'll save money. So I said, makes sense to me.
Mm-hmm.
Okay.
Yep.
And I switched.
Well, let me give you another example. So I do a little bit of angel investing and it's part of a group. We have a fund. We don't make investments in entities that aren't C corporations. So if you set up your small business and you are that LLC that's taxed as an S corporation and you're looking for an angel investor who knows what they're doing, those angel investors typically won't write a check to you because they're looking, the investors are looking for that big exit, the 20x, the 100x exit at some point. And we may need to bring in more investors and there's going to be huge tax implications when there's an eventual exit. So that's from a non-tax perspective, there may be other reasons that you want to be a different type of entity. So
everybody's different. So that's why just reach out and get a plan for you.
Yeah. And laws change too, right? We just, we have a new law that just got passed. So when stuff like that happens, that's why annually I'd sit down with the trusted advisor and be like, hey, what do you know that's coming up down the pike? Here's what I have going on. What's the best solution for me?
Yeah. I mean,
how do you find a trusted advisor?
You follow Bradley's podcast and you listen to the guests that he has on, right? Mm-hmm. But I think that's the point is the president signed this bill on July 4th, which means we got 5 months left this year to do the things that we can do. So the cool thing about the One Big Beautiful Bill is it's going to reduce taxes for most of Americans. They don't have to do anything. It will just reduce their taxes. But it also gives you a whole bunch of options of things that if you did do proactively and make some changes, you can multiply that savings.
So give me an example. What do I have 5 months left to do?
Yeah, depends on what you want to do, right? You want to buy that.
I want to make money.
Yep. So you
I want to save it.
So what do you want to do with it, right? So you want to invest.
Don't worry about what I want to do with it. I want to retain it.
All right, then let's go buy a.
Maybe I want to blow it. Maybe I want to go to a Bahama island and drink for a year.
Great. Then what we're going to do is we're going to structure that in a way that it's going to be part of your company's quarterly like board of directors meeting, right? And you'll be able to write off part of that trip. Or you want to buy that vacation home. Well, we're going to set that up as a short-term rental and we're going to do a cost segregation study. Or you want to buy a new car. You want to buy an airplane. That's my favorite strategy.
Nowadays,
you want to buy another business, buying businesses and doing cost segregation studies.
Right. That's what I want to do too.
Yeah. They brought bonus depreciation is back.
Right.
It's at 100% now for several years. But if you're going to go and buy a business, and as we record this, it's the end of July, you might not be able to close that by the end of the year. Right. So we work with our clients proactively because listen, the millionaires and billionaires that everybody complains aren't paying their fair share. Why do you think they're not paying their fair share? Because tax season is year round for them. They're constantly looking at this stuff and making moves that it's stuff that they want to do and accomplish their goals, but they're going to do it in a tax advantageous way.
Yeah, how can I structure this correctly?
Because they have trusted advisors.
Yes.
Yeah.
And that's what I want to urge people to think about. Like, it's time to get a trusted advisor. And what's crazy is, let's say it's you guys. You don't even charge that much. Like when I said, well, how much do you guys charge? I'm like, what?
Yeah, don't let that word get out of me.
Well, yeah, but I mean, even if you didn't do anything except save me that, which is easy to do, especially with me, because I'm overpaying for sure. Everyone should consider that. Mm-hmm. What level of income, net or gross, does it matter?
We like to start helping people when they are netting on their tax return $250,000 as a minimum.
But if you're making $100,000 and you're a business owner, right? Because there's so many more options for business owners. That if you're a W-2 employee making $100,000, your options are going to be limited. Maybe start a side business. But if you're an entrepreneur making low six figures, you may not need a monthly amount that you're paying to your tax strategist, but you do need to be having an occasional conversation that's forward looking and not backwards looking, right?
What about people that have a W-2 income of over a couple $100,000? What if they start an entity or a charity or something? Mm-hmm. Like I was told you can operate as an entity and save taxes even if that entity doesn't actually generate revenue.
A better way to do it is set up that entity as some sort of side business. Could be real estate investment, could be doing short-term rentals.
Yeah, but my point is you know, there's a lot of W-2 people I'm sure listening. And they're like, well, I don't have a business. This ain't for me.
Yep.
Slow down, son. I think everyone should have a side business.
For sure.
Even if it's not active.
Yep.
Just as an entity. And you get, for example, your paycheck. Mm-hmm. If you went to your employer and said, hey, I'd like you to pay Bradley Inc., I don't think they care. Like, why would an employee care?
Well, they might care because of contractor versus employee rules. Because in that case, you'd probably be considered a contractor. They'd 1099 an entity versus W-2 it.
And that may not be a good idea for an employee because now they got to go out and get their own health insurance and retirement accounts and all these benefits that you get by being an employee. So might be more trouble than it's worth to set that up. Yeah. Where we see that most common actually is like with real estate agents, for example. We work with a lot of successful real estate agents that they will set up an entity. Maybe they have a team, a couple of employees, and their brokerage gives them their piece of the commission checks and set up a company and structure it that way. So,
well, as an employer, I don't care if one of these guys came to me and said, hey, I'd rather be a 1099 contractor. As long as they're doing the job, I don't care how I'm paying it.
Unfortunately, it's not your decision. The IRS has a set of rules on whether they're an employer or contractor. So
what are
see
the
a
rules?
lot of people getting into trouble with that actually.
Yeah.
But what are the rules?
They've got it. I'll completely oversimplify.
Does the IRS want me to have W-2s? Probably.
Yeah, because
they make more taxes
on you.
You got the employer and the employee tax on that. So they got a set of rules, but it's not your decision. It's the IRS that says.
Well, again, I respectfully push back a little only because you're the expert. But in my opinion, I just want to know the rules because again, it is your choice. I'm the employer, so I can say, look, I'm terminating you as a W-2 employee, and now I'm bringing you back as a 1099. So that is my choice. The question is, did I do it right?
Yeah.
According to the rules, because the rules are what matter. If the IRS says, no, they're W-2 because they got to show up at 9 and they sit in your office and you have business cards and they're not paying for their own medical.
Yep.
So they're W-2. Well, if I know the rules, I can say, okay, well, here's what I'm going to do then, because it one way or another, I'm putting them on as a 1099.
There are ways to work around that for sure.
You just got to know the rules.
Here, if you want a complete oversimplification, are they really a separate business or not? Right. So if you hire me as your tax strategist, I'm clearly not an employee. I got my own website and logo and my own team. And you're hiring me as a contractor. But if I'm showing up every day, 9 to 5, using the pencils and paper and laptop that you give me, and, I'm not a real business. I'm an employee. And
you as my contractor, you can show up and use my computer and pencils.
Not required to, though.
There's the rule I'm talking about.
Yep.
See, required. Now we just say, okay, IRS, if they're required or not required, that's the loophole. So it's like, hey, you're not required to come here, but there's an office if you'd like to. And then, of course, you opt into every day because, I wouldn't like it very much if you didn't use my office, but it is optional.
Yeah.
Then you're going to need a lawyer. That's why a lawyer and a CPA is the best.
Yeah, we're going to tell you to avoid that brain damage because there's a million other things that you should be doing before you get into that. It is a lot easier as an employee to hire contractors. That's why most entrepreneurs do it, but too many of them get it wrong and actually can get into huge trouble with that.
Well, I have a bunch of W-2 employees, and I always say personally, I don't care, because personally, I don't care as long as it's by the rules. So if I have if it's 1099 person, for example, and I say there's a mandatory meeting, well, they don't have to be there. Mm-hmm. Why? Well, because they're 1099. I don't have to worry about their business cards and their templates, although, I'll be happy to provide some. But that's probably something we should talk about, because I'm sure there's a lot of people going, yeah, that's what I do. So what kind of trouble can they get in if they got a bunch of 1099s because they only have like themselves on payroll?
Yeah. So, I mean, at the state level, you might get in trouble with unemployment and workers' comp, but at the federal level, the IRS can come back for several years and say, pay all of that tax to us that you would have paid if they were a W-2 employee.
And that could bankrupt a company.
We've seen it. We've seen it happen.
And they don't care.
No, they're generally pretty heartless about that. Yeah.
So what would you say if someone's out there operating right now with more 1099s than they think maybe actually should be? Would you counsel them, or?
Yeah, I mean, you could get advice on that, but also if you're a do-it-yourselfer, you can go and find the form that the IRS has. You can actually ask the IRS, should this person be a W-2 or a 1099? There's a risk with that. Yeah. But if you fill out the form and it shows you the questions, you can kind of figure out for yourself whether you're doing it right or wrong. If your whole motivation is it's just easier to pay them as a contractor, but they're full-time showing up for you, you might be lined up for a bad time there. So,
well, because as an employer, now you got to pay this, you got to pay that. And then once you get more than 50, well, now you're a big business and you got this to pay and that to warn them on and all the bullshit. Yep. So a lot of entrepreneurs are just like, we're going to make you 1099.
Yeah.
Yep.
When they technically should not be 1099s.
See it all the time.
And people have gone out of business for that.
Oh, yeah.
Pay attention, folks. Pay attention. And then let's get back to the good side of things, which is money.
Yeah.
Because as entrepreneurs, we're trying to make money and keep it. And the difference, like when you guys said you saved yourself $250,000, $250,000 could be the difference between, marketing and not marketing.
Right.
Oh, yeah.
Like if you put 250 into a good marketing campaign where you're getting 4-to-1 return on ad spend, that 250 would make you $1 million the next year.
Yeah.
Right.
But if you just wrote it off to the IRS, now you don't have the money to do the advertising. Next year, you're not growing very much.
Yep.
So in reality, you guys will help businesses grow, assuming they're, intelligent in the first place.
We prefer to work with businesses that are interested in growing.
Right.
Yeah, because that's what the real value is. Like I don't want to save money so I can go drink in the Bahamas. It's I want to save money so I have more people I can hire, more advertising I can do, more software I can leverage. and I need that money.
That's the coolest thing about doing this is that's most of our clients. They're not looking. It's not like, I want to defund the IRS and save all this money because I'm going to do. No, you ask them, what would you do with an extra $50,000? Well, I'd put it back in my business. That we get that answer so often, and that's why we love working with entrepreneurs, because that's what it's about, right? And you're going to get a great return on that. Now, you may put it in your retirement account or give it to your financial person, but most of our clients, when they start picturing that little bit of extra money or a lot of extra money, it's almost always going back into the business or going into a new business that they want to start. And I just think that's so cool.
Right. And when you start investing the money into those ways, there's even more ways you can find tax savings, right? So sometimes we have people come to us and they don't want to do anything more. They just want us to find the savings in what they've already done. Well, we can find some things here and there, but it's better when we have like a plan. There's something that we know that they have a vision for their future, for their business to grow, even for what they want their life to look like. And how can we make that happen in a more tax advantageous way?
But how do you know who to trust as a civilian? Because I have a friend of mine who says, man, if you just set up this trust and that's owned by that trust, you don't have to pay taxes at all. And then you're like, what? Like, how do you verify who's full of shit and who's not in your world?
Yeah. How do you do that in any world? I mean, talk to people who've been there and.
Yeah, but this guy supposedly sets it up for all the rich and famous.
Yeah.
He's like, that's how the rich and famous do it. And every time I think about it, it's like, dude, prisons are full of people claiming you don't have to pay them.
Isn't it? I mean, you just get that gut feeling, right?
Yeah, I don't want to not pay unless, of course, it's legal. But I don't know if this dude's full of shit. How do you check?
Yeah.
Yeah. I mean, I think I'm going
to put him with you guys. And I want him to pitch you, and then you tell me if he's full of shit.
That would be fun.
I'd love to do that.
Because he will say that even if you say he's full of shit, you just don't know.
Yeah.
Right.
I mean, he's pretty convincing. He's almost had me set up these trusts before. And every time I'm like, no, dude, there's got to be something wrong here.
I have a similar issue on the other side of that I tell accountants that they're full of shit because there's things that they don't know. And they will swear up and down, no, the rule says this, but they can't actually find that rule or they can't actually cite it. It's just the way that they've done it for a long time.
Maybe the IRS told them it's the rule when it wasn't.
Yeah. And the IRS can't make up rules like that. So it gets me so fired up. The IRS doesn't have the authority to make a lot of the rules that it makes. There's a big US Supreme Court case on that. So yeah, people, accountants in particular, they get so risk averse and they're so afraid of anything,
especially the IRS,
that they follow what the IRS says. Meanwhile, grow a pair. And I'm not saying we need to go into battle. I'm not saying we need to take super aggressive risks, but again, as your advisor, I want to tell you what the risks and rewards are. I want to tell you the pros and cons, and you're a successful entrepreneur. You go and make the decision of what you actually want to do on this, right? Based on your risk profile. And yeah, if it smells like bullshit and you have a good sense for stuff like that, then you probably want to consider avoiding it. But there's other people out there that are going to say, no, all I got to do is set up these trusts and fund them and spend all this money to do that. And I'm going to avoid probate and it's going to be so great. And I eliminate my tax bill. Let's go do it. Fine. That's your call. But
what about offshore?
All right. So there's good ways to do it. I'll tell you a strategy that we like using with some of our clients that qualify for this. They got to be making, I don't know, probably $1 million minimum, but, you can set up what's called a captive insurance company. You literally create your own insurance company and you pay it premiums. And just like a good insurance company does, it reinvests those premiums in the stock market and gets returns and can make distributions to you. So we have a law firm client, for example, they set up a captive insurance company to insure their professional liability on some stuff. But they're their own insurance company. Really cool. There are ways depending on how aggressive you want to be, to move some of those proceeds from that captive insurance company overseas. I think somebody was talking about doing it through Great Britain or something like that. So again, it can be done, but there's so much bullshit out there with influencers that do tax strategy stuff and people doing this really complex stuff. And it's like, how about we start with this? How much profit did your business generate last month? 99% of business owners go, I don't know. Okay, well, we're going to figure that out first. And before we get into this crazy complex stuff that's going to be really difficult to implement and it's going to disrupt your life, why don't we just start with the basics of like, are you writing off everything that you should be writing off? Like, let's start with that before we.
But isn't it usually the opposite? They're writing off too much shit.
Actually, I'm going to say no.
Yeah.
They get stupid with it. They try and get cute and they say, oh, I got the custom suit made and I got my logo embroidered on the inside of it. So now it's a marketing expense. And normally I couldn't write off my clothes. And it's like, they do that. Meanwhile,
like
they're not writing off their meals and entertainment, or their kids are working in the business, but they're not actually paying the kids to work and getting the tax benefits from that. So there's always almost always lower hanging fruit that we're seeing that like, that nobody told you that you should be doing this other stuff. Meanwhile, you're trying to get cute and you're consulting Chat GPT on crazy stuff that you can do when you're not even doing the it's like, I want to lose weight. So I'm going to start wearing this bracelet that's got copper and magnets in it, but I'm going to keep drinking beer and eating pizza and not going to the gym. Right. Like let's start with the obvious, easy stuff first. And then we can get into that bigger stuff.
Let's talk about hiring kids.
Yeah.
If I have a 3-year-old, how do I hire her?
So they have to do work. So is there anything that you could hire her to do?
Plenty.
Modeling.
Okay.
You ever heard of a what do they call the pets that when you bring on an airplane, they console you?
Like a service animal.
Yeah. It's a service child.
Your emotional
Service
support
child.
child.
Emotional support. Yeah. She's emotional support.
So
So what's a reasonable wage to pay for that?
Shit, for my emotional support, it's worth millions.
Yeah.
would someone else pay her millions?
Is that
do that.
what they?
I mean, that's
Nobody
been
else
the
would pay
recent-
her.
That's
the recent.
thing.
That's the recent thing
Okay,
with
well
child
then,
modeling.
yeah, but where's the law? What's the law state?
Well, and that's court cases have been found against the entrepreneur in that case where with a lot of modeling, because what is the reasonable wage, right? Because
See, they make
line,
it sound so
yeah.
easy. You can pay your kid.
Well,
I know.
Well,
These
there's got to be rules.
scary.
Yeah. There are a ton of rules. So we got
There's-
2 kids.
here.
Our 14-year-old's on payroll. He's got a job. We pay him what we would pay anybody else to do that job.
Yeah.
Our 7-year-old doesn't work in the business. And listen, I hate the IRS. I hate paying taxes. I like to get really aggressive with this, but we're not putting our 7-year-old on payroll. There's not enough value that she can add in our business to make that
Justification.
Yeah.
Yeah.
It's
Eventually,
not worth it. Yeah.
like if she comes after school and can do data entry, or we see a lot of like shredding if there people even have paper file anymore, but stuff like that where you can justify it. You're tracking their time and you can give them a reasonable wage for it. For the time they're doing.
What do you pay the camera guy that follows you around 24/7 and records your content? Well, I could have my 14-year-old do a lot of that, especially during the summer, and I'm going to pay him market rate for that.
But you can only write off so much.
Yeah, there's a cap on the benefit, but it's still a few grand per child that you can save. Plus, by the way, you're teaching them how to work and how to add value in a business.
So
which
my
is a pretty good
3-year-old
skill.
shouldn't be an employee.
Normally we see they're more employable over the 7-year-old.
Because again, I mean, I could bring my 3-year-old and make a commercial.
Yes.
Yeah.
And you could pay them the rate that you would pay an actor to be in that commercial.
But I couldn't say, what's the limit? 15 grand.
Well-
750 is the standard deduction right now.
Okay, so if I say I'm going to pay her 15 grand to make one commercial, and then now they say, well, any actor would have paid, not my child. My child would normally charge 150.
So I would find information to support how 750 or 15,000 is reasonable.
So if you guys were my advisors, are you guys going to find a way to do it legally, or are you going to advise me just don't do it?
It depends. If
we're
there's a
never
way that
going to
we
tell
can
you
find-
do it or don't do it. That's
Right.
going to be your decision.
If there's a way that we can give you the options, okay, so here's what you want to do. This is how we can do it. It might not be the whole 15,000 if we find comps that aren't in that space, for example.
But you're going to go look for comps for me?
Yeah.
So you're going to advise, like, Brad, I know what you're trying to accomplish,
Right.
but what we found is you can't.
Yeah.
Right.
Because I want to find people almost that, like, confirmation bias, where I'm just looking for someone to agree with me, like the watch.
Yeah.
I want to be able to say that's a costume.
So that's the game that we play, though, is that too many clients of accountants don't know the right questions to ask, and too many accountants don't give a shit about their clients to point the question in the right direction. So I'll give you an example. Is my Rolex a write-off? Most accountants are going to say, no, your Rolex can't be a write-off. The game that we like to play is, how can we make that Rolex a write-off? And there may not be a way to do it.
That's the good ones right there.
Yeah.
Because again, it may not be a write-off for everybody, but I looked at the rule, and the rule states this. So Brad, if you made 8 videos with that Rolex, then it would be considered a write-off. Why? But you have to have 8 videos. And then I'd say, okay. And then I'd make 8 videos. We'd document it, show them, save them, just in case we get audited.
Yep.
And then when the IRS comes in and says, dude, you wrote off a Rolex, you can't do that. We go, aha, talk to Adam. Yes, we can.
Yeah.
Well,
maybe you got enough volume of watches that you're buying and selling, and we set it up as a separate business, and now you're carrying inventory in that business. I mean, there's again, not saying that everybody should go and do that, but there are ways to make it work. And let's talk about those rather than saying, no, you just can't write off you can't write off your custom suit. You can't write off your watch. You can't write off your Ferrari.
What about cars?
That's my favorite. Yeah.
Yeah. So, that comes down to business use, right? So, absolutely, you can write off cars. It depends, you would buy it in the name of your business, right? And you have to demonstrate
Ideally,
your business use, right?
Well, what if it's influencer?
Yeah. Influencers.
Nobody
and tax
wants to follow a dude with a Toyota Corolla. I had to buy a Ferrari so people will follow me.
Mm-hmm. Good luck with that one. Yeah. Yeah, there's a lot of bad tax advice that comes from.
Well, if you go through my taxes, you're going to go, dude, you didn't write off that. You could have. You didn't write off that. You could have.
But that's most business owners. They think, oh, I got to find a way to write off the Ferrari. And it's like, but there's other stuff sitting here that, you should have been taking bonus depreciation, or you should have done that cost segregation study, or you should have taken the credits for the retirement account that you set up for your employees that nobody bothered to set up for you. So yeah, there's, and that's why I try not to be too dismissive of that more aggressive, cutesy stuff. We don't need to get to that point. There's other stuff before we get there that is way less risky, and the benefits are just as significant. So let's focus on that stuff. If you want to buy a car and you want to write it off, you talk to a tax strategist that says, all right, here's what you need to do in order to write that car off. We're going to track your miles. We're going to, maybe double dip with some home office stuff. And,
once you make enough money, it's almost like, who cares? I'll just buy it. I don't want to deal with all that shit.
Yes.
And not only that, someone has to do the math and be like, you really want to go through this much work to save $9,000?
Yes. That's right. I love that. It's not fuck you money, but it's, I don't have to deal with this shit money. Yeah. Cool. We all aspire to get to that point.
Yeah.
98% of business owners aren't there. They want that extra cash and
extra. So you're saying that most business owners, they're not writing off as much as they could. Yeah. Because I would have thought it's the opposite.
No, most of them are overpaying on their taxes because they think that there's loopholes out there that they got to be pursuing. And it's like, no, you're not even doing the basic foundational stuff. Yeah. Let's start with that.
And how much over do you think most people are paying?
It depends on the size of the business. Let's keep in mind that most business owners aren't making any money either, or any real money. So you get into that percentage of people that are making $250,000 or $1 million or more. There's a lot of businesses making $250,000. There are, and we got mom and pop, law firms, or other small businesses that we'll save them $500,000 in a year. Might be we might. Depending on what they want to do and depending on how they want to implement it, we have clients that we eliminate their tax bill for them, and they're going and creating wealth or keeping more of the money that they're already.
Where if they didn't get you guys, they would have just given it to Uncle Sam.
Yep, and he wouldn't have done much good with it. So yeah,
that's crazy. Dentists, lawyers, landscapers, doesn't matter.
Yeah,
consultants.
Yeah, we work with a lot of marketing companies for some reason. Those guys, a lot of those guys.
Well, because realtors are independent.
Yeah,
they're technically little businesses,
and there's a lot of opportunity.
It can be tough because they don't have a ton of expenses. They drive a lot. They a lot of gas, a lot of mileage, and stuff like that. And they maybe spend on marketing, but they're not buying equipment. They're not.
That's another thing.
But they have the real estate professional status that they can easily attain, right? And
they're
then
great
they can
things.
go crazy.
Well, like when I go fill up my cars, I just use my personal credit card, fill up my tank. But now let's say I'm supposed to drive to LA for a meeting. Well, I don't remember that, hey, this is only $80 worth of gas, but because it's just $80, I just put it on my card, like my personal card,
Yep.
where I probably could have wrote off $80.
Yeah. Or here's a
Yeah.
cool thing, because this doesn't require forward-looking proactive planning or keeping the receipt. You just go and figure out how many miles it was, and you can take the deduction for that.
Yeah. Well, you get, maybe through an accountable plan with your S Corp, you get reimbursed for it, for example.
Is there any apps that every business owner should have to keep track of their expenses that you know about?
First of all, I'm not sponsored by any of these apps.
Yeah. If anybody wants to set up affiliates, we're open.
Ones that I've kind of tried out with some clients that I like are, MileIQ is good. And then Reps Tracker, I've had real estate professionals use that to track their hours.
And then just using QuickBooks for your revenue and expenses.
Yeah.
There's ways to take a picture of the receipts using your QuickBooks app, and it'll upload it and sometimes even categorize it for you. So that can be really helpful. MileIQ is a good one though for tracking mileage, because you can actually set it up that every time you move, it'll ding and say, is this business or personal? And it gets a little annoying, but
what do you think the top 3 mistakes entrepreneurs are making with their taxes?
they don't look at their numbers. That is number one. Number one, they don't look at their numbers, not even from a tax perspective, but like we demand in our business that by the 5th of the month, we have the financials for last month, because we can't run our business without that. Right. So that's it. They don't know. They don't know how much money they made. They may know their revenue.
That's me.
Yeah. We talked for quite a while before this.
Yeah.
I mean, somebody knows. Like if I got pissed and said, hey, I got to figure this out, I make a few phone calls and it's being tracked. It's just, I personally don't know.
You can access it with a couple clicks of a mouse or a text message on your phone.
And
That's
maybe
great.
a 10 key calculator.
Yeah.
Because I have multiple businesses. I'd have to do that with like 6 different entities.
Mm-hmm.
Yeah. But having someone help you consolidate that, because really your taxes are the whole picture, right? So that's why we like to meet with clients on a monthly basis and have all those little pieces and put them into one calculation. Because at the end of the day, that's the whole picture, right? Your tax return is your whole picture, your personal tax return.
We'll have people that see us at an event, and if I get up on stage, I'm going to say bad things about the government and probably some bad things about accountants, and the people in the room get all fired up and they say, I got to hire you. I hate paying taxes. I'd say, all right, show me your tax return. You paid $3,000 of taxes last year. Like, I get that you hate paying taxes, but $3,000, come on. Right. But they don't even know. Maybe they know what they paid in estimates, or maybe they know what the check was that they wrote in April, but they don't understand the full picture of how much they actually paid. We get it on the other end too, that another husband and wife couple that they paid $1 million in taxes. He had no clue. I thought we were on Zoom. I thought he was going to throw his laptop through the window. A 7-figure tax bill. This guy had no idea. And again,
can't you amend?
You can, but it's often too late to do anything. And there's additional risks with amending. So sometimes you can.
It's a pros versus
but
cons.
that's the whole point is that's what people don't get, is this isn't going back and cooking the books and fixing things backwards. This is looking forward and saying, what can I do? So when we came to Vegas, we got a business purpose for today. We created a business purpose for yesterday by doing our quarterly planning. And this is now a 3 or 4 day trip that we get to write off all the hotels and all the meals and the flights and all of that stuff. And we're having some fun too. So,
yeah.
I couldn't figure out how to get the vow renewal ceremony to be a write-off, but we're still working on that. So.
Well, again, because you're influencers now.
That's it. Yeah.
That was all content.
Yeah. We talked about it.
Yeah.
Probably not worth it, but yeah. See, I got to figure out what's worth it and what's not, because there is legitimate shit that I have to spend big money on that I'm not doing it solely for content, but it sure is great that I also get the content.
Yep.
So for example, going out to Seattle to the Morgan Wallen concert. Well, I'm an influencer. I got to be seen places. You got to be culturally relevant. Morgan Wallen's hot. Showing up there, taking some autographs or taking some pictures, I had to do it. I didn't want to,
you know what?
But I had to.
You may be in a category of a big enough influencer that, maybe. But but that's 4,500 followers, knock that shit off, right?
No, I know, but like I want to figure out where that is, because everyone, I think, should build a personal brand, period.
Yep.
And I think, again, not going against the law, but leveraging the rules. That's it. It's just like the rules state, if you're this, then you can do this. Okay, well, then I would suggest and advise people, you probably should start doing this. Why? Yeah. Well, because now you have this loophole.
Yeah.
That's like when Trump and Hillary Clinton were famously arguing, and he said, if you want me to pay taxes, Hillary, then change the law. Because it's just the law.
But the difference is he's got a massive team of accountants that do this stuff full time for him. Most business owners can't afford that team. So we bring it to them on a fractional basis.
But that's what I'm getting at. Yeah. So Trump says, change the law, but you won't, because you and all your little rich people made the law so you could not pay taxes. You're just worried that you're trying to exploit that I'm not paying taxes when none of you son of a bitches are paying taxes.
He plays the game better. Yeah.
Yeah. So all you guys would have to change the law if you want to really actually point fingers, but you won't, because you're doing the same shit. It was and the general public doesn't understand. They're like, oh yeah, Trump's not paying taxes, son of a bitch. No, Trump is leveraging the loopholes.
Yep.
And that's what I want most entrepreneurs to understand. It's not breaking the law. It's playing by the rules, but someone on Trump's team knows the rules.
There's two reasons taxes exist. One is to raise revenue for the government, of course, but the other reason is to create incentives and disincentives. There's things that the government wants you to do or doesn't want you to do that they use tax policy to control. You want people to smoke less? Tax the shit out of cigarettes, right? It's a good example. You want to create more jobs and get more people employed? Great. Then create incentives for business owners to go out and hire people. Some of those things exist. You want to encourage investment? Great. Then there's tax policy in place to encourage investment in people, in real estate, in machinery, in equipment. But a lot of business owners don't even know this stuff exists, or they don't know how to do it. So that's
because they don't have advice.
Right.
That's it.
So do you guys spend your whole day studying the new bills, the new laws? You have like email notifications when something changes?
A little bit. Yeah. I mean, it does change at a rapid pace. But again, we get into some really creative, aggressive stuff with some of our clients. But most of our clients don't even need to get to that level. There's so much that their accountants are leaving on the table.
So the average entrepreneur, you say, hey, reach out. As long as you're making over $250. Yeah. Otherwise, it probably ain't going to matter that much.
Right.
But if you're netting $250 or more, you should reach out for a consultation and let us just walk through. What's a consultation with you guys even look like? Is it an hour? Do you even offer one?
I mean, not really. We have a sales team that converts the clients, but we offer the guarantee. So we have clients that we may work with for a month or two and then say, you know what? There's nothing here. Like, here's your money.
You've been doing a good job.
Yeah.
Yeah. Our standard offering is a tax plan. So, and that's where the money back offer comes in. So right now those are priced at about $5,000, for example. And so we have like 3 sessions where we'll look at what you have, talk about what you want to be doing, what is like coming up in the future, and propose just based on what we've looked at so far, what we think we could do for you, but then have another meeting after what you've told us, after we've looked into some things, what we think your savings would be, and then presenting a final plan.
For the same 5 Gs?
Yeah. So it's normally 3 meetings over a span of about 3 months.
You guys should change it to commission only.
There are businesses out there that do that.
Because if you told me, hey, listen, I'm not going to charge you 5 Gs, but if you let me look at your shit, I'm going to tell you what I can save you. And if you came back and said, hey, I'm going to save you $500,000, you don't tell me how, but you just tell me $500,000, but I want 100. I'd be like, deal. Yeah. If you're saying, give me $5,000 and I'll still save you 500, like, dude, you're leaving money on the table.
Yep.
Yeah. We've definitely tried it that way. We're trying it this way right now.
I don't love that model for a couple of different reasons. But yeah, I'm okay with our clients seeing more of the upside and then sending us more referrals.
That's what'll happen.
Yeah.
Because again, I'll almost feel slighted.
Yeah.
If you're taking a big old chunk like that, especially if it's easy shit I didn't even know about.
That's kind of it. Or there's things that we say, hey, you do this and it'll save you $500,000. And then the client drags their feet, or they don't want to do it, or they aren't sure. And it's like, well, we charged you based on that advice, but now you're not going and doing it. So there's good and bad ways to do it. But we've got a flat fee structure. We've got a monthly structure.
What's the most you've ever saved somebody?
I mean, well, not counting ERC.
I feel like I just saw
it was close to-
6.6 on somebody's plan. No, I don't know. You would know better.
Oh, that's, I mean, yeah, that, I guess that's like a stretch.
Yeah.
I mean, but around $1 million is the most, just with Pennywise
In 1 year.
In 1 year. Yeah.
But a lot of that's every year, forever and ever and ever.
Yeah.
So
Because once you set it up, you just do it every year.
Yeah.
for some of the stuff, yeah.
Yeah. I mean, there are some strategies, maybe you can't reinvest in it, so you can't save as much, but yeah.
So what about the big beautiful bill that just passed?
Mm-hmm.
Like what's new in there that like everybody better pay attention to?
Yeah. So like I said, there's some stuff that happens automatically. Tax rates are lower. Tax brackets are bigger. That I don't
For
care.
everybody, even if you voted for Kamala
Yes, for everybody.
or Kamala,
Unfortunately, yes.
Kamala.
Yeah. So yeah, just about everybody. They've done some studies, and the people that make, I think 1.1 million is the threshold. That's like 1%er. Many of them may see an increase, but just about everybody else is going to see a decrease in most scenarios if they take no action. Now, there's action you can take. There's stuff that you can do.
Right.
Bonus depreciation's back. We're pumped about this, but you've got to do work in order to take advantage of it. So,
Yeah, when I read the gist, and I just threw it in ChatGPT, I said, "What's the gist of the new tax bill?" I was reading down the bullet points, and I'm like, nothing changes for me. Like I'm in a tax bracket where nothing changed. Like
you're still in the highest bracket.
Yeah.
Right.
nothing changes for me.
Yeah.
Well,
So I'm like, whatever, because nothing changes.
If you do nothing,
Right.
if you continue to be reactive about your taxes, nothing's going to change. Actually, for most Americans, being reactive and doing nothing will actually reduce your taxes.
Right.
It's a huge gap in revenue.
Because in my mind,
And a
if
lot
I
of
make $1 million, I just automatically calculate 40%, even though I think it's like 37 or whatever it is. But
yeah.
I just calculate, okay, 40%.
So
That's
what
the
if we could
government.
get that down to like 10%?
Well, then I'd be in love with you.
Okay.
no, don't go making promises.
No, I'm not, but it just as an example, and that's
that's
it.
an
Is
example.
people
Well,
people
I'll
think
be
there's a right answer on their taxes.
Well, I'd be a poster child because I'm not taking any strategies.
Mhm.
Because again, I mean, my whole life has just been easy come, easy go. As long as I can pay bills and live and be fun and have fun. I've never really like fiduciarily was fiscally responsible.
You're a lot more laid back on that than most people.
Yeah,
A lot of
money
our
in,
clients-
money out. Like as long as I got some, I'm cool.
So a lot of our clients, either they're frustrated because they work so damn hard to build their business and there's never enough money left over at the end of the year. So they want to keep more of it. Or we get some folks who say that like the biggest expense of the federal government is paying interest on the debt for the money that we borrowed. So literally they're taking your tax dollars to before national defense, before roads, before schools, before Medicare, before any of that, debt is our biggest expense. And there's people that say, I don't really want to be a part of that. So how can I pay less?
Well, I just started, my bill kept growing and growing and growing to where it got to a point where I'm like, damn, dude, is that for real? Like that doesn't even make sense to me.
Yeah. Again, an average-ish client that maybe you save them $100,000 a year. I mean, 100,000 every single year after year. That eventually,
Not
you're
only that,
talking real money.
100,000 well invested is way more than $100,000.
Yeah.
If you have a marketing department that is getting even a 3-to-1 ROAS, well, dude, take that $100,000, put it in your marketing department, you get 3 times the revenue. That's actually $300,000.
Yep. Yeah, or put it in an index fund and earn whatever 6-7%. Like do something with it. Instead, it's going to pay the country's debt instead of growing wealth for you.
So where do you guys live?
Erie, Pennsylvania.
Pennsylvania.
In the woods, yeah.
Are you guys like up in the mountains in a cabin?
No, we are right on the Great Lake.
Yeah, we're on Lake Erie,
Lake Erie.
but our property is pretty secluded. So
Yeah.
So Pennywise Tax Strategy says here, high-level tax strategy firm for entrepreneurs and small business owners who want to keep more of what they earn. Why is that your overall goal? Why do you care about that?
So, my background, I didn't grow up a child of entrepreneurs. My parents are W-2 earners. And I married into a very entrepreneurial family with an accounting background. And actually, when Adam first started his law firm, I remember just being like, okay, we always talked about that revenue number, right? We did this much in sales, but how much are we taking to the bottom line? And then how much of that do we actually keep from this business? And it's important to me because I think there's a lot of people that don't have that accounting look to it. And they don't have that mindset of what can I do on my taxes so that I get to keep more of this? Because when you're in an entrepreneurial family, it's not just you go in and clock your 9 to 5. You're talking about it at the dinner table. You're talking about it on vacations. You're dealing with business most of your time. So I'm passionate about them being able to keep more of it to do fun things with their family or to grow the business and have a little less stress about how you're going to find cash to pay payroll or whatnot.
Why do you think so many CPAs suck at saving people money?
Because they don't care about people. They care about getting the numbers right on the forms. And sometimes they don't even care about getting the numbers right on the forms. Sorry, I'm bomb dropping, I guess. They just care about getting it done according to what they were provided. And so I think a lot of accountants don't care enough about making sure that they do this.
It's funny, you're starting to sound like me. And it's a very broken industry. The whole industry is based on January 1st comes around, we find our shoebox full of receipts, we hand it to our tax preparer and hope they get it done by April 15th. And then every accountant, every tax preparer out there goes to Mexico for a month after that because they just worked their ass off for the last 3 months to get all these filings done. It's just a broken industry. We flip it around and we're not reactive. We're not backwards looking. We're forwards looking. And I mean, we didn't invent tax strategy, right? There's other businesses out there that do this stuff. But that's it, is like, we are the entrepreneurs that we've sat at the kitchen table. We've sat and gone, how do we come up with 10 grand in the next 3 days to make payroll? How do we come up with 100 grand next month to pay for the thing that we signed up for? Like, we've had those conversations. We have that family business and we know that so many other entrepreneurs do. And those are our people. Like, those are who are here to help.
So what's the difference between tax planning and tax prep?
Tax
One
prep
is valuable and helpful. The other's a necessity.
Well, so those are two different services, really, right? So when you pay someone to prepare your taxes, they're taking what you gave them and they're putting it in the boxes on the form. And that's, earlier when we were talking about, who's responsible for the tax return, right? And this is where the professional can point back at the, taxpayer and say, hey, I just did this according to what you gave me. You didn't tell me about that. The liability rests with you. I think, so I think the standard for prep is get the return done to the level that, you've been given the information. Tax planning is working with the taxpayer, a professional working with the taxpayer and being like, tell me all you got out there. Let's make sure we're paying taxes where we're supposed to be, and like where you're not supposed to be paying taxes. Let's take advantage of that credit. Let's, you bought a car that's an EV vehicle. Let's make sure we get that credit before it expires, kind of thing. Or you're thinking about doing it, go do it now before the end of September. Stuff like that. Put
solar on your house.
Right. Yep. Exactly. Stuff like that is planning. And then it gets its way to the form correctly if you're doing it with the same person, right?
So the planning is the value. And I'll bet you most people out there are not planning. They're just preparing. So at the end of the year, they say, what do I owe? And the guy says, $1 million. And they write a check and they're like, damn, I hate taxes.
Yeah.
Where if they just took a minute and strategized for the year, by that time, that bill could have been eliminated or drastically less.
Yep.
That's crazy.
But it doesn't happen by accident.
Right.
What do you think the most overlooked deduction is that businesses miss?
Ooh, that's a good question.
Well, I think when you go from being that LLC, where you take that home office deduction to making, for example, that S Corp election, I really do see a lot of people missing taking advantage of the expense of having a home office where they do actually work. This
is a good example. So if you're an S corporation, right, you're LLC, you did your S corp election, and you go to your accountant and say, I want to take the home office deduction. your accountant's going to say, you can't. S Corps can't take the home office deduction. And technically they're right, but creatively they're completely lacking, because I can still set up a home office and I can be reimbursed for that expense through the business. And now it becomes a deduction to the business. So there's a creative way to do that it's so black and white to so many accountants that you can't do it. Well, it turns out that there actually is a way to do it. So that's a really good example.
And because it has to be done before, like it has to be done.
Yeah, you can't wait until the year's over.
You can't wait until you're done. It has to be done as a planning, as a proactive strategy.
So I don't know about the most common one, but my favorite one is the Augusta Rule, which again, a lot of influencers talk about. But you can rent your home to your business, and you can do it up to 14 days a year. So I got a rent expense to my business. I got rental income as the owner of the house, or even a house that I rent. But if I rent my home for 14 days or fewer per year, I don't pay tax on that. So we rent our home for client events, to shoot content, to do strategic meetings that we would rent a conference room.
So
at
I
a
could do
hotel
that for sure.
Yeah.
Because I really do put things on there, but I don't ever pay my rent from it.
So let's say you want to, you look up comps, right? There's websites out there to do this, or we do it for our clients. And let's say you got a moderate house that if you were going to go and rent a conference room, it was going to cost you $1,000 at a hotel. Well, I can rent my entire house out for that $1,000. And if I do it 14 days a year, that's a lot, that requires some planning, but that's $14,000 I could pull out of my business tax free.
What if your mortgage on the house is $40,000?
Well, can help take a chunk out of that mortgage. Yeah.
No, I know. But like, again, this is where I don't like where the IRS comes in and tries to say, yo, you could have rented a conference room for $1,000. Fuck you. I didn't.
Right.
I rented a fucking mansion.
Yep.
Okay. And I have the right to.
Yeah.
And by the way, that's why I'm in business, you bitch, because people like my style and taste.
They're okay.
So therefore, don't question that I rented a $40,000 house to throw my meeting in.
Yep.
Go back in your cubicle and look for the people that ain't paying taxes. I'm paying them.
Yeah.
I hate when they like try to dictate what you should and shouldn't do. Like, well, you could have done this for $1,000, so we're only allowing $1,000. Yeah, if you want me to go fucking put my shit on at a Denny's, I'm not doing Denny's. So I'm doing freaking, Ocean Prime.
Well, good example. If you
or a Christmas party. I'm not throwing a shitty Christmas party.
Yeah.
Well, that's excessive.
Expense, right?
Who are you to tell me what's excessive?
Well,
but for you, it might not be excessive though.
Yeah.
If you, if you can demonstrate that it's ordinary and necessary, which is what a business expense represents.
A Christmas party is ordinary,
exactly.
But why would it be necessary to throw it at the Four Seasons? Well, it wouldn't be, but that's where I choose to do it.
You can absolutely make that argument. If you travel for business, worst case scenario is for me tomorrow, I got to fly Southwest out of here, and I'm a travel snob. Well, it's a business flight. I can write that off. But on the way here, we flew Delta. We flew first class. Well, that's okay. You can write off first class, even though I could have flown economy.
Can you write off private?
You can fly. You can do it private too. So we, a couple of years ago, bought an airplane that we put in an entity that we rent to ourselves for business travel. And we get the deduction for that. So
because one time I had to get to a speech. They're paying me money to go to the speech, and I couldn't get there commercially.
Yep.
It just wasn't working out. So I chartered a jet, flew out there. Well, dude, that's an expense. Now, if someone goes, "Oh, you could have bought a ticket for $2,000," but I didn't. Dickweed. It doesn't matter that I could have went Southwest.
If you're ever looking for a job, Brad, I want to hire you to help with audit defense, because fuck you, dickweed is exactly what we want to say to the IRS when they come knocking at your door. So if you're ever looking for an opportunity,
well, again, it just bothers me because listen, you don't get to decide, folks. This is America. Okay, if I want to be exorbitant in my expenses, that's up to me. If they're expenses, they're expenses. Hey, if you travel, it's an expense. Okay, I decided to travel in a private jet.
Yep.
Oh, that's not an expense. You can't that's not ordinary and what'd you say? Ordinary and necessary. You could have went Southwest. Yeah, so what? I didn't.
Well, but I think you can make the argument that it is ordinary and necessary is what I was trying to explain. So if they come back to you and say that it's not ordinary and necessary, well,
compared to what though?
Well, exactly. So for example, if you are going to give a speech and someone is going to cover your travel and they would ordinarily, cover that, they would pay for that. Like that right there is demonstrating that is ordinary and necessary for you and your business. It might.
But why does it need to be? That's my gripe.
Well, I don't know
because people would just play the game and eliminate their taxes, right? So we are.
Well, that's the goal, isn't it?
Well, yeah.
Play the game.
Well, but
Give me the
you have to live
rules.
off of something.
I'll play the game.
Yeah, but and we can do it within their rules. And that's what most people don't understand.
So you know what else I did on that occasion? Because the jet was $40,000 back and forth.
Mm-hmm.
So, and they were paying me $50,000 to speak. So I was only going to net 10. I don't want to net 10.
Yep.
So I said, listen, good old power of social media. I said, hey, if anybody wants to roll with me to Dallas, do a little speechy speech, sit backstage with all the other speakers. We'll mastermind on the way there. We'll mastermind on the way back. We'll network. We'll talk. I'll coach you. We'll chop it up. We'll build a relationship. Proximity is the power. $10,000 a ticket. Well, it was a 15-person jet and 12 people bought a ticket for 10 grand.
Yep.
Yeah.
So now the jet was only 40.
Mm-hmm.
So now I made 80 G's.
That's how entrepreneurs do it. Yep. The next
then,
one, the next
And
one.
the 50.
And that's even making it a better business purpose, right? Because then you also are selling a product to them. You're coaching them in that location. See?
So
that's what I mean. So and they've never came around. But my point is like, if they did and they said, well, you couldn't have done that. Well, again, I also wouldn't have generated $10,000 to fly on Southwest with me.
Yep.
Right.
So again, it's like, it depends on how creative you are, but just give me the rules.
But you did that in advance, right? You came up with the idea before that flight to go and monetize this thing and go and sell it. And that's the point. You can't do it after the fact and try and find some way around it.
But wouldn't they want to incentivize entrepreneurial thinking? Because I generated 130 grand in revenue rather than just 50.
Yeah. And in that instance, they did, right? Here's another example.
So they win.
So we talked about renting your house and this Augusta Rule thing. You can rent your dwelling. Well, if you've got a boat with sleeping quarters and a bathroom, that can count as a dwelling. So you can rent your boat to your business as well for masterminding, for client events, for things like that. So,
but you have to document and know all the rules.
But I mean,
don't you guys get bogged down with all these people trying to like make all these notes and rules and mileage and?
No, I mean, when we're doing it for so many people, we start to have, templates and and there are templates even available, that we've already started. So it becomes, I think it,
the business
scales.
is not cookie cutter. That's for sure.
Yeah.
What do you think the dangers of just using TurboTax or H&R Block's Quicken or whatever, like the figure it out quick taxes?
I mean, I think entrepreneurs should value their time more than that. They shouldn't be doing their own taxes on there. I think that's we actually did that for years when we first started. Jackie worked for a bigger company then, but I think it's a waste of an entrepreneur's time to do that. For not a lot more money, you can have a professional prepare your taxes for you. But again, the risk is you're going to be leaving money on the table because there's stuff that you're going to miss. You don't know enough about taxes to fill it out. So why try and do that on your own?
What do most accountants not want their clients to figure out?
That I think there's a lot of accountants are worried that, it's the emperor has no clothes or whatever. Like they're worried the reason they don't sit down with their clients and explain their taxes is because even the accountants don't understand them well enough to explain the positions that they've taken. I think there's a lot of fear there of like, man, my client's going to figure out that I don't even know what the hell I'm talking about. Or they're going to start asking the tough questions about why didn't you do this? Why didn't you do that? And I don't have a good answer for it. I think
who knows more between this shit, you or you?
Her 100,000%.
Well, because again, you're a CPA, you're not a lawyer.
I'm not. Yeah.
So how would you know more than a lawyer?
Because I'm not much of a lawyer. I'm doing sales and marketing.
Well, but
still there's law.
Yeah.
And then there's numbers.
But also, this strategy is only as good to you as it gets to your tax return, right? So you can tell them all the strategy to do. If it's not documented right, if it doesn't end up in the right place, you don't get the benefit of it. So, and I think that the numbers, you can run the numbers, but you want to run them through the tax return too, so that you know that it's a numbers game too, because you might go take this deduction, but as a result of taking that deduction, it puts you in a different bracket. So you then lose the ability to take a different deduction. So sometimes, it is just a whole puzzle, and you need to have the person that also understands how it works in the puzzle.
So you need both.
Yeah, that's why we built the team. We got spreadsheet nerds that can get out in there and model this stuff out, and then we got former IRS attorneys that work for us, and they collaborate and they work together on it.
And then if I were to use you guys, and then all of a sudden I'm getting audited, do you guys help me with the audit?
Yeah. I mean, there's some limitations on that with some rules. There may be conflicts of interest if we gave you advice that you may need to bring in somebody else that we work with. But I mean, we stand behind our work.
Because my fear would be I hire you guys. Yeah. Everything's clipping along. You guys save me a ton of money. I'm happy as shit. I love dropping bombs, and then all of a sudden IRS comes knocking on my door and they're like, well, Adam and Jackie told me, you're getting audited.
Yeah, we're nowhere to be found.
Now I'm calling Adam and Jackie and they're like, well, tell them this and tell them that. Like,
no. Yeah, we would.
Dude, I want to say, look.
No, remember we said we actually give a shit about our clients?
Yeah, exactly. Like, okay, so what's happening?
I want to be able to say, listen, talk to my tax team.
Yeah.
Mm-hmm. Don't talk to me.
I don't want them talking to you. You're going to fuck it up.
Well, 9 times out of 10, you need a lawyer.
Yeah.
As soon as you tell the IRS, talk to my attorney.
Yep.
They don't talk to you anymore at all, which I prefer. I don't want to talk to the IRS. Yeah. I would recommend strongly that anyone that's approached by the IRS, do not talk to the IRS. You will get yourself in a shithole where if you have representation, you're better off.
Yeah, good representation.
So, again, a billionaire told me that. Yeah. Never talk to the IRS. You will fucking open your mouth and say something and they will fucking screw you. Yep. Period. And they have no shame in the game.
Yep.
So as soon as the IRS knocks on your door, hello, IRS. Yep. Talk to my attorney. They legally have to not talk to you and go talk to your representation. So I'd hire you guys just for that. But I want to make sure if I did hire you and that happened, can I just talk to them?
Yeah.
Mm-hmm.
And you'll talk to them.
You don't want to have to deal with that.
You'll talk to the IRS for me.
Yeah.
Or anything. Because again, the IRS don't come around because I overpay.
Right.
They would start coming around if I hired you, I bet. How do you, do you guys ever flag audits because of all your clever little loopholes?
It's such a massive organization and most of their enforcement and audit work is spent on those people that are making hundreds of millions, right? Like that's where they spend all their time. Trump gets audited every year or was getting audited every year, it seemed like. So
what do they do in these audits? Do you know? Do they go through every dime and every receipt?
That's actually a really good question. Cause you mentioned when the IRS comes knocking on your door and I use that same analogy, but the reality is 99 times out of 100, they send you a letter. It's all through the mail and they say, send us this documentation and you mail it back to them. And then they send you mail back and they ask it's rare.
They came to this business and knocked on the door. They came in.
They very rarely do that now.
Yeah, they showed up.
Yeah.
Well, I think
it used to be a thing.
Well, at some point, I there was a disgruntled employee that we let go, and their cousin or somebody was with the IRS, and so next thing you know, dude, the IRS did come, and they were in my offices for 3 months every day for 3 months. These two IRS auditors, and they went through everything.
Yeah. They do that less and less now.
And then when they left, nothing out of place.
When they left, they were laughing at you, I think.
No violations. No, that's why I think they left is because they realized, oh shit, dude, this guy's not taking advantage of every loophole he could have.
Yep.
Matter of fact, we just want to back up quietly because this guy's overpaying.
So there's that. It's more likely the most successful audits that we see are the ones where the documentation is so strong, right? Because what we're trying to do with tax strategy is create more deductions. There's other things too, but trying to create more deductions, right? We want more expenses in your business, generally speaking. Well, the number one reason that the IRS disallows those deductions when they audit you is because you don't have documentation. So part of our job is making their job real easy. They want to come in and see something, some position that you took. All right, here's the documentation. And they go, see you later. This looks pretty good. I'm going down the street to the guy that's got nothing. Right. Mm-hmm. So that's what's been really helpful. I mean, I've been doing IRS work and tax work for years and years and years. And the clients that have better documentation have a much better time dealing with the IRS.
Yeah. Does anyone reach out to you because they have tax issues?
So that tax resolution or tax controversy is a different business. A lot of our clients do have that though, because they've got this gut feeling that something's off with their taxes. Their accountant's not doing enough for them. And they just say, you know what? He's a nice guy. I see him at the country club, whatever. I don't want to ruffle any feathers. And then the IRS notice comes and they say, all right, fuck this guy. I need somebody new. And then they come and see us. So we do get a lot of clients where that happens. So you got to clean up the old mess and then fix the new stuff.
Yeah, and you guys speak on stages, at a lot of events. So you guys are becoming more and more known. You got a podcast now. What's the podcast called?
Podcast is called Maverick Mindset Radio. So we're talking about a lot more than just taxes.
Where do they find that?
So we're on Facebook, Spotify, iTunes. And if you're in Erie, Pennsylvania, 107.1 FM.
Maverick Mindset Podcast. Radio. And then where do they follow you? Where do people follow you?
So pennywise.tax is our Instagram. And then I'm on as Cars Coffee Capitalism.
And I'm on as Faith Fashion Finances.
Isn't that cute? Well, dude, I appreciate you guys coming in and sharing this with the listeners. I know that you're probably going to get hit up. Where's the number one spot you'd prefer inquiries?
So our website's actually a great resource, pennywise.tax. We got free PDFs and downloadable guides and stuff on there. So best way to reach out to us for sure.
Pennywise.tax. Yep. Yeah. So Bomb Squad, I don't know. There's no code that you use, so I get a commish. But if I were everybody listening, I'd be paying attention because we're trying to grow and get rich and become successful, and we're hardworking. And every single entrepreneur out there doesn't realize that if they could save an extra 100 G's, that 100 G's is gas money. You can hire 1-2 more people. You can, advertise a little bit more. It could be what breaks you through to the other side. And now all of a sudden it's flooding in because you made that one little crack with that one little bit of money that you saved because you were smart enough to get some damn sage tax advice. And you're not going to figure it out by trying to read the law and use ChatGPT. So don't be penny wise and dollar foolish. You guys should be dollar wise.
We talked about it. Yeah. Our daughter's name is Penny. So.
Yeah. And the Penny just got retired, right? So, but anyway.
I know, but isn't it penny wise and dollar foolish?
No, it's a pound foolish. Yeah.
Yeah, but I don't want to be penny wise and pound foolish. I want to be pound wise
and pound wise. Yeah.
Yeah. I know.
I'll be.
We spent way too much time.
I did
we
bring that up to him.
Yeah, penny wise. Anyway, appreciate you guys coming in, folks. As always, keep kicking that ass, and most of all, keep it real.